everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit, so you want to manage risk in a way that makes sense for you. If we get a chance, we'll go over some ideas in that regard. Our web trader and app make it pretty simple on the risk management side of things with the risk calculation and potential profit calculators built into the order window. So we'll go over how that can be helpful with the risk management side of things. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log in the upper right corner here to our web trader platform, which allows you to trade on both MT4 and MT5 accounts from one location, but with the advanced tools as well, such as our free signals, the technical analysis breakdowns within those signals. The fundamental news tools as well are available in both locations. So let's go ahead and get into the web trader. And what we could talk about before we get into the technical analysis is where we sit fundamentally in terms of what might be moving the markets before we start looking at the technicals. The really big thing on the schedule is coming up in less than an hour now. And so if you look at the economic calendar, you'll see that there's an FOMC rate decision in the US. That's the group, the folks that decide monetary policy in the US, along with Jerome Powell. The expectation is that the US, with this rate decision, will keep the rates the same, that they won't raise or lower the interest rate. Some believe that they should lower the interest rate maybe to help the economy out a bit. Inflation has come down quite a bit. It's come down more than expected on some of the recent data, the CPI data specifically, which is really looked at in a strong way to get a feel for what's happened with inflation. Out of the US, the CPI data a week ago or so was lower than expected, and the markets kind of cheered that for a bit. So it'll be interesting to see if it comes in at expectation with no rate cut, or if maybe there's a surprise cut in the rate, which I would suspect the markets would really cheer that if that happened. When I say the markets, I mean the equities, the stock market, and really not just the US, but around the world would probably be happy if there was a rate cut. Many times as the US market goes, the other markets tend to follow quite a bit. It's just in general, businesses would like to see lower rates. Individuals would like to see lower interest rates. Those buying houses, those buying cars, business loans, etc. It makes the cost of doing business and the cost of buying things on credit cheaper when interest rates are lower. And so many are hoping that there'll be a cut, but the expectation is actually that there won't be. So we'll see what happens. But certainly this, along with a half hour after the rate decision, there's a press conference where there will be a lot of questions asked and a lot of theory talked about as to why they held the rates the same or why they lowered the rates, whatever they decide to do. They'll talk about that, and they'll also talk about what their plans might be moving forward. And that moves the market quite a bit as well, even if the rate comes in unchanged as expected. As that press conference gets going, you could see a lot of volatility on the charts as they talk about what might be anticipated in the future for potential rate cuts or not. And so a lot of times it's not the rate decision that really moves the market if it comes in at expectation, but many times then it's what they say afterwards in the press conference. So right now, over the course of the rest of this evening, you can expect a lot of volatility, especially on USD currency pairings and also US indices specifically, okay, and US stocks. So With that as a backdrop, then we need to think about our risk management and how we might carry things out. Given that it isn't every day that there are these rate decisions, we probably want to protect things in a way, and I'll use some strategy concepts where we use AvaProtect as a means to handle that type of volatility, because the volatility could go up, back down, back up before it finds a direction in the longer term. Okay, and so if you've got a stop loss on one side and you take profit on another, and at the end of the evening it went the right way, you still might lose. Because before it goes that way, you could expect with the rate decision and the press conference that there'll be a lot of spiking in both directions potentially before you actually get a movement. And so protecting with a short stop loss before these types of announcements many times doesn't work out. And if you have other means of risk management like AvaProtect, where you don't necessarily need a stop loss until the protection is almost over, then you can get through the spiking without any further risk and without getting hit on a stop loss, and then wait for the bigger movement, okay? Without any extra risk involved because you use something like AvaProtect. So I think given the current circumstance and the upcoming economic announcement, I think that's probably the direction that makes sense to go with today's session. So we're kind of doing a FOMC rate decision specific strategy session. So first of all, we could look at the Euro USD. It for sure will have a lot of movement with the rate decision. Really any USD pairing, you could expect a lot of movement. We can't pick the direction for sure, but we for sure know there will be a lot of movement depending how you define a lot, I guess. Let's take a look. And by the way, if you have questions, I don't see any popping up, feel free to type your questions, or if you have input you want to give, you can do that as well. Okay, so if we look at Euro USD, first of all, let's search it up here so that we can get it on the main screen and see. I'm sure there's a signal on it right now. Okay, Euro USD, what's the signal? There's a live signal. If we click here on this symbol, we see it's a sell signal. So it seems that they're expecting the USD to strengthen as we go towards this rate decision. And it looks like it's been trending that way through the day today. So you see this chart, an initial drop, a pull back up, and then again a drop on the Euro USD headed towards the take profit zone down here. If it doesn't get there before the rate decision, then all bets are off on this signal. And what I mean on that isn't that it can't win. It's just that you could see a lot of spiking up and down like this as that rate decision comes in. It looks like it's trying to get to the take profit before the rate decision, but I wouldn't bank on that happening necessarily, okay? As it gets closer and closer to the time of the rate decision, which we're under an hour, a lot of times you start to get sideways movement until the rate decision comes in anyways. So let's get rid of that window, expand the chart, and we can take a look and we can see on 1 day candles, there's been quite a tear up with the euro against the USD. And so it looks like we've reached a resistance level as far as the 1 day candles are concerned right here. Okay, so I draw that line because we see for 1, 2, 3, 4, 5, 6, 7, 8, 9 days, it tried to get above this and failed. Okay, that's 109.54 or so resistance level that it hit once and dropped, and then took several days to get back up, hit again, tested it again, tried to break a little bit, and down it went. Okay, so we see a breakdown off of this resistance level already as we are approaching the rate decision. So it looks like there's an anticipation that they will not cut the rates. And in fact, that's if you look at different sources, including our economic calendar, it shows the expectation that the rate will remain unchanged, that they won't cut the rate. Doesn't mean they won't, they could, but it's leading into expectation here, and the expectation is driving this movement that maybe there's not going to be a rate cut. Why would the USD strengthen with that anticipation? Because if you cut interest rates, that tends to weaken a currency. Why? Because it's less valuable, right? If the interest rates are lower, you make less money by holding that currency. It's less valuable then. If the interest rates are higher, you make more money by holding that currency. If you're holding it in an interest-bearing account at the bank or something, higher interest rates pay you more money. And the banks make more money by loaning it out on higher interest rates. So higher rates tend to strengthen a currency, lower rates in general tend to weaken a currency. It doesn't mean immediately that will happen if a rate cut occurs, but in general, lower interest rates tend to be bearish on a currency, and higher interest rates tend to be bullish for the strength of a currency. So if the anticipation is they won't cut the rate, then the USD is strengthening in that anticipation. If there was an unexpected rate cut, what might you expect to see occur here? Probably a move right back up with the USD weakening and the euro rising up then to test this resistance level again and maybe break it. And I would suspect break it if there was an unexpected rate cut. Okay, so how you play this right now depends on what you think will happen with that rate decision. Now, there has been some unexpectedly low inflationary data out of the US recently. I spoke of the CPI data that came recently out of the US that was quite a bit below expectation. Okay, some numbers across the board showed a very big slowdown in inflation or drop in inflation. So maybe if you're looking to try and catch the market off guard, if you think maybe there could be a rate cut, or that at least during the press conference, they'll talk about the need for rate cuts soon, that could be enough to weaken the USD back as well. Then you might consider this strengthening of the USD a technical opportunity to then buy on the Euro USD. Okay, if you expect either a rate cut or you expect talk about future rate cuts to maybe be a little stronger this time, then you might think the euro could then climb back up against the USD. Okay, and so let's take that side of things. That yes, the euro has strengthened a lot against the USD, but if you look traditionally and you look at 1 month candles or something, okay, here's that climb over the past month. Okay. But look up here. If we get rid of some of these other lines so we don't confuse ourselves. Okay, if we look in the past, historically, where has the Euro USD price been? I mean, look how high it can be. Okay, $1.24, $1.25 up here. Okay, and we're below $1.10. Okay. Major resistance is found, I guess, here on the 1 month candles. Okay, this is the 1 month candle setup. Resistance up at this level. Multiple months hitting this price area and dropping, and that's up at around $1.12. Okay, so on the 1 month candles, we see this climb up. While it looks big on the 1 day candles, there's a lot of room to climb to $1.12 before it hits the next major resistance level on the 1 month candles. Okay, so it's not unheard of for the euro to be up above $1.10, above $1.12, even up towards $1.25 if we look historically on these charts. Okay, and you can see further back on the 1 month candles, we're up above $1.30 over here. Okay, if we go back far enough, 2015, 2016. Okay, so we're not asking for something that's never happened if you think that this could go up higher. Okay, I want to show you that perspective first on the 1 month candles. Now, I'm not saying you should buy on Euro USD. I'm just picking a side here based on expectations that perhaps the FOMC committee might talk about, even if they don't cut rates tonight, they might talk about that they know they're going to need to cut rates soon. Okay, and if you anticipate that type of talk might occur, then now we're looking at 1 hour candles. Look at this big drop on the 1 hour candles. You might start looking at these support levels here and say, well, I kind of like these support levels here or down here on the 1 hour candles, okay? And on a normal trade, without AvaProtect, you might just put your stop loss below this support level or below the next one on a normal night. But because there's this big rate decision and FOMC statement, you could see volatility in the short term that could break this support, but by the end of the week or by the end of next week, you might see it back up in the other direction, okay? Or by the end of the day or by the end of the day tomorrow, okay? Once the short-term volatility of the announcement is done. So if you're trying to get beyond the first few hours of volatility or even the first day of volatility, let's say you decide you wanted to buy on this, and you could easily say sell. If you think the opposite, you do the opposite. But I want to show you the strategy concept. So you think maybe in the short term it could drop to these support levels, but let's say you're of mind that you think eventually this will go back up because you think rate cuts are inevitable in the US, okay, if that's how you felt. So short term, you don't want to get your stop loss hit, so maybe you operate with AvaProtect. So we go buy position, and we take a look and we say, okay, how much would AvaProtect cost? This is a 15 lot position, okay, probably a bit large. Let's go 1 lot first. AvaProtect for 1 hour. You can protect by the hour, you can protect by multiple hours, you can protect by the day. I think I want to get through today and maybe even tomorrow to give it time to make a move in the direction that maybe I think it will go once the smoke clears, okay? And that direction can, again, it can be any direction that you think. I just tend to believe in this simulation that the bigger picture brings rate cuts eventually here for the US, which tends to weaken, in general, weaken a currency, okay? And so the larger technical analysis shows us that if it breaks this resistance here, the 1 month candles show a clear shot up towards $1.12 even before you hit the technical resistance on the 1 month candles. So going beyond this resistance level on the 1 hour candles or the resistance we saw on the 1 day candles, you break past that, maybe there's easy flow if there's momentum to get to something pretty much higher than $1.10, $1.11, etc. Okay, so we start to look then at take profit then. And we saw in the larger candles, let's go 1 week rather than 1 month this time. And we can see here, $1.12. It's the same line we drew on the 1 month candles. So here's resistance on the 1 week candles, 1 month candles at around $1.12.12. So let's go $1.12 even as a potential spot for a take profit. And boy, if there was an unexpected rate cut, it might get there quicker than you think. But we'll see. So $1.12 as a target price for a longer term type move. And you know, if we put 2 days protection and this is off and running, let's say into profit, the protection ends. You could then put your stop loss at entry. So you have zero risk to let it then keep running. You could put your stop loss at whatever price you want below wherever it is at the time the protection is about to end, okay? And so eventually you want to add some other method of protection once the AvaProtect expires. And it tells you exactly when the protection expires for the length of protection that you're buying, okay? So for $342 and change, which is much less than 1% of my balance, okay? So it's less than 1% risk on my account. I can have 2 days protection and I'm going after over 3,200 profit if it goes to my target price. So that's almost 10 to 1 potential profit compared to cost for the protection. Okay, if I'm right, 1 out of 10 tries, I'm breaking even, I guess, right? If I can win 25% of the time on a move like this, then I'm in a great profit. Okay, and hopefully I can win more often than that, but you know, you don't have to let it carry out to the take profit either. You know, in a couple days, this could be at a profit level I like as my protection ends, and rather than moving the stop loss up, I might just manually close the trade. Okay, could do that as well. But for 2 days, I don't have to worry about if this goes 300 pips the wrong way. I get paid back those losses from the protection as long as that negative movement occurs during the protected time period. Once the protection's over, you get paid any negative floating, or if the trade closes during the protection, you get paid any negative from the trade. Okay, and all the profits are yours. You're paying this up front, okay, if it goes into profit. So now I need to decide, is this the right take profit? $1.12, that's where I see the resistance, $1.12.12, so I like that. I could look for an earlier take profit at $1.0954, okay, then it doesn't have to break this resistance. So I could explore that idea, $9.54. Now my potential profit's only a little better than double the cost of the protection. I don't really like that setup because I have 2 days to let this run. So I'm going to go higher than I think maybe it'll reach in 2 days. But just in case it goes flying up there, I'll put a higher take profit at this resistance, and I can always manually close if it gets to a different profit level that I like. Okay, 2 days protection. Maybe I'm willing to pay a cost of 1% of my balance for the protection, in which case that would be like 550, 552. So I can take a larger trade then. So now I'm risk managing here. If I do 1.2 lots, the protection costs 410. 1.4 lots, it costs 478. Okay, getting closer, 1.7, 581. So now 1.6 or so. That puts me at just under 1% of my balance. 547 is just a little bit less than 552, which would be 1% of my balance. So now I know my risk or my cost for this 2 days protection. I have no other risk within those 2 days protection other than overnight interest, which would be very small for a couple days. And my potential profit now, look, is ballooned over 5,200, almost 5,300 if it goes to $1.12. And even if it goes halfway there, it's a really nice return. If it just breaks this resistance and goes somewhere up here, I'm making thousands of profit, and my cost is less than 1% of my balance for this risk management setup. So I'm going to go ahead and enact this market move. I'm going to buy now with that setup. Okay, so I've got a Euro USD trade running. I've taken advantage of this drop today. I mean, look at this huge drop in the Euro USD. Even while we were talking the last 30 minutes, look at the drop further. So we got a nice entry point if this is going to reverse to go up. I expect it could drop further. We already said that in the short term. It looks like it's trying to go to that signal that said to sell on Euro USD, and that trading central signal was dead on. It's trying to go down to the take profit zone. And maybe it already entered the top edge of that. I expect this might try to push down to this area as the rate comes in. And then we'll see after that what the rate decision was, what the FOMC statement is, and by the end of the evening and tomorrow morning, we'll probably see what direction this wants to start trying to run. And we've got the advantage now of AvaProtect that we can wait a couple days even to see what direction is this going to go. And when there's such a big fundamental news decision, you'll many times see technical breakouts. And so we're looking for a technical breakout on these one-day candles that this might reverse and break through this resistance. Even if it gets to the resistance, we're in a nice profit because it means it retracts all the dropping it did on today's one-day candle. That would already make more money than what the protection cost. And if it breaks this resistance, then it could be up and running over the next couple of days. So we'll see. The potential is there to have a technical breakthrough because of the fundamental news. And a lot of times that's what drives the fundamental or the technical patterns on the chart is the fundamental news. And so we go to something like 2-hour candles and we start to see the first support level we drew that we said likely it'll break that, and it's breaking it now. Here's the second support level that we drew. And I said likely it will test that. And so it's on its way. When you make a move like we made for a couple days trade, you're not worried about your entry point necessarily being exactly perfect. I wasn't putting a pending order, waiting for it to break the support level before buying, for example, because we've got AvaProtect, we've got a couple days to wait it out, and we're not waiting for an exact, to the pip entry point necessarily with this type of strategy. But I do like the second support level and the first support level to slow things down until the rate decision comes in. And then we'll see when the smoke clears, does it pop back up or does it continue falling? If it continues falling, we don't lose anything more. We have AvaProtect. We can wait a couple days even and see if it'll come back up. You even can see if it drops further to another support level down lower, you could see a spot where you'd manually close it, let the AvaProtect pay you the negative back, and then you re-enter only down less than 1%, the cost of the protection, okay, from a much better entry point then. So there are strategy sets that you can use with this AvaProtect. But this is just testing this first support level, which is exactly what we expected as we lead up to the announcement. What else could we look at then to think about similar ideas? Well, I don't know about you, but a lot of people have been noticing gold being on a tear, and today was no exception. It was just flying. This week it's been flying up. Everyone's been talking. I've been talking about 3,000 as a mark that many thought gold would get to. And now it reached and surpassed it. It blew right through 3,000. I talked about having pending orders waiting at 3,000 to do a short-term sell. If it ever got there, I thought it might be a spot where it would push down. Here's where it first reached 3,000. Okay, let's bring one of these lines up. Oops. One click will do it. Okay, 3,000 was right here. Okay, had you had a pending order to sell at 3,000 with a stop loss up a bit, okay, it hit 3,000 and down it went $20 almost immediately. Okay, within the hour of hitting 3,000 here, tested it a bit, and right down in the first 2, 4, 6 hours would have been an easy sell. Pending order from 3,000 down. Many traders did that. In fact, that's what pushed the market down. Was many traders that trade in the real market sold from 3,000 because it was a nice round number. Okay, and so short-term sell-off of there was an easy take, and then expecting it to push back up to that number was obvious. So it went right back up and then broke above, and it became support, and then up it went. Okay. We reached above 3,040 today, pushing towards 3,050. Now with the rate decision, just as the USD is strengthening against the euro, as the rate decision comes, the USD is strengthening against gold. So gold, at least temporarily, is pulling back down right now. Okay, gold has the opportunity to trade with AvaProtect as well. And since we're traded in one direction, euro USD, saying if there's an unexpected rate cut, or they talk very strong about future rate cuts, maybe euro goes flying up against a weakening USD, we can take the opposite with gold. And gold's at all-time highs, so if it does start to drop, it could really drop. So what if they don't lower the rate and they say they don't anticipate any near-term rate cuts? If they say those things, the USD could strengthen like crazy and gold would plunge potentially against the US dollar if there was unexpected talk in the opposite direction about things that would strengthen the USD. So then we're kind of hedging ourselves. Either the euro is going to go up against the USD, or the gold is maybe going to go down against the USD, and we'll lose on one and maybe win big on the other. Okay, and what you lose on one is what the cost of AvaProtect was, and what you win on the other hopefully is a lot more than the cost of AvaProtect. Okay, so it's a strategy where you can use the high point, which is a technical advantage. Okay, we start looking at gold. It's at all-time highs. It's formed a resistance level. So from a technical perspective, we've got a nice resistance level on gold. Resistance, 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 resistance. Okay. Granted, it's only a resistance that formed today because we're at all-time highs. There is a technical resistance level. So if anything about the rate decision and the FOMC press conference causes the USD to strengthen, then you could see some type of rapid drop of gold. Okay, I'm not saying I expect that, but let's prepare that perhaps that could happen. And if that happens, then gold could easily, if we look at larger candles, let's go to larger candles, 1-day candles. If gold was going to pull back, okay, from the resistance levels, we could pick a spot that we think on the 1-day candles this could drop to. And the first spot that jumps out to me was this resistance level. Okay, these are 1-day candles, and for some reason we found resistance here once, twice, 3 times, 4 times, and then a big drop, and then up. And once it broke past this price level, there was momentum and it formed a higher support level. Okay, so this looks like an important price level. It was at 29.57. Okay, another important level is 3,000, obviously, 3,000 even, because that was resistance here, and then it broke above 3,000 after temporary resistance. So if we're looking bigger, beyond the first resistance level, and you think it could break back below 3,000, if it's big enough news, it could. Then the next support level is down around 29.58. Okay, technical support level, which is this old resistance. So if I'm going to short this and say there's big news coming, I think gold could have a big move. It could go either way, which is why I'm using AvaProtect. So I'm not Nostradamus or anyone else that thinks they can predict the future. So I don't know for sure what the rate decision will be. I don't know for sure what they'll say in the press conference, but we took a shot that they're going to be kind of strong towards future rate cuts, maybe at the very least, with that Euro USD trade, which was going with a weakening USD and the Euro climbing. Now we're going to take the opposite direction. That for some reason, gold might find a reason to pull back after all this climbing with this huge news that is coming shortly. So I'm proposing a potential sell with AvaProtect, and I'm going to do the 2 days protection again. I want time for this to move. I don't care about the first few hours spiking up to another all-time high. I don't care if that happens. Let's see what happens over 1 day, 2 days. So 2 days protection. With this strategy concept, anyways, I don't care about the first few hours movement. Not that you can't trade shorter term, because you certainly can. All right, so I'm looking take profit 29.57 as a support level if it does drop. So I'm going to say 29.60 just before that support level. So 29.60 on a sell gives me over $21,000 profit with this trade size. But also, I don't want to pay $5,351 for AvaProtect. So that trade size is too big. So I'm going to say 0.3. Okay. Now my protection cost is around 1% of my balance, just under, and my potential profit is almost 2,200. So again, if I'm right on a move like this, one out of a few times, I'm making a nice profit. And again, I don't have to let this run all the way to the take profit. If in a couple days it's down around, say, 3,000 or a little under, I probably made back the cost of the protection plus, okay, already. So I'm looking a couple days out and projecting maybe I can make over $2,000 on this move, less than 1% risk, and I go ahead and pay for that protection. Okay, so we're set up in opposite directions, technically from opportunistic entry points. Gold went up to all-time high, formed a resistance on the 1-hour candles. Looks like it's trying to push down a little. Let's see what the FOMC rate decision and press conference does for that. We have a much larger potential profit than risk. And then the opposite for the euro, we see that it's opportunistic, that it pulled down pretty much all day today. And we think there might be a rate decision and press conference that maybe could work in favor of the euro going back up from the dip that it took today. And so we're in the opposite direction than gold, going with the euro against the USD on that one. And with this strategy, we've kind of hedged ourselves in terms of whether the USD rapidly weakens or strengthens. One of these should probably at least go the right way. There's no guarantee of that, so we put protection on both. And we can wait it out for a couple days and see what happens, okay? And my goal on this is maybe just to try and make overall 1 or 2% profit on my account. So after a couple days, if one of them's way in the negative and one of them's way in the positive, if I make $1,000 on this trade, I'm happy. And it's, maybe 2% gain or something like that. And the potential to even make more. Okay. And worst case scenario, I'm down less than 2% with these two trades. Okay. With 98% of my balance still there to trade on other things, but going after a much larger potential profit on this. As we expected, Euro's pushing down a bit still. We'll see what happens as these decisions come in the press conference and the following day or two. I think this is a good place to stop. Any questions, comments before we end things on the strategy ideas that we did here with AvaProtect built into our technical strategies, kind of using the fundamental news as a bouncing board, we might say, or a trampoline that we think the rate decision and press conference might really springboard one of these trades in the right direction today and moving into the next couple of days. Any questions about that or comments? Okay, great. I must have been clear. Thank you all for attending. Good luck if you're going to make any trades this evening. Be careful, like I said. Big news coming out of the US. We're expecting a lot of volatility, which means protect yourself on the downside, maybe in a unique way, like we did here with AvaProtect, and go after those profits if you see trades that you think make sense. All right, everybody, thank you for joining. Bye for now.